If you freelanced in 2025 expecting a stack of 1099s in January, and this year you're staring at a mostly empty mailbox, you're not being ghosted. The rules just changed under you. Two freelancers earning the exact same $18,000 from the exact same client in 2026 can now get completely different paperwork, and one of them is way more likely to underreport income and get a very unfriendly letter from the IRS about 18 months later. According to the IRS instructions for Forms 1099 MISC and 1099 NEC revised December 2026, the reporting threshold for non-employee compensation just jumped from $600 to $2,000 for any payment made on or after January 1st, 2026. That is a huge shift, and it's the first of three big changes that decide which form lands in your inbox: the NEC, the K, or the MISC, and how you're supposed to reconcile all of them on a single Schedule C without double counting yourself into an audit. So let's actually untangle this, because the three forms are not interchangeable, and treating them like they are is exactly how freelancers overpay or underreport. Start with the 1099 NEC, because for most freelancers this is the main event. NEC stands for non-employee compensation. If a business paid you for services, writing, design, consulting, contract dev work, coaching, whatever, and they paid you by check, ACH, direct bank transfer, or wire, that's a 1099 NEC situation. Under the One Big Beautiful Bill Act, signed July 4th, 2025, the old $600 threshold that had been on the books basically forever got raised to $2,000, starting with 2026 payments. And that new $2,000 number is indexed for inflation starting in 2027, so it'll creep up over time. One quiet detail most people miss: on the December 2026 revision of the form, non-employee compensation actually moved from Box 1 to Box 1A. If you're using older accounting software that still maps to Box 1, that's a real problem when you go to file. Worth checking now, not in April. Here's my honest take on that threshold jump. A lot of freelancers are going to read $2,000 and mentally translate it to, if a client paid me $1,800, it's not taxable. That is completely wrong, and it's the single most expensive misunderstanding I see in this niche. The IRS says it plainly in Publication 1099 for 2026. Reporting thresholds do not affect whether income is taxable. If your net self-employment earnings hit $400 in a year, you owe Schedule SC self-employment tax on it. Period. No form arriving in the mail does not mean no tax due. It just means the IRS is trusting you to report it yourself, and if you don't, they'll eventually catch it through the client's expense side. Now the 1099-K, which is where things get genuinely weird. This is the form for payments processed through a third party. Think PayPal goods and services, Venmo business, Stripe, Square, Etsy, Upwork, Uber, DoorDash, all of them. For a hot minute, we were headed for a $600 threshold under the American Rescue Plan. Then the IRS delayed it, then OBBBA came in and blew the whole thing up. Per IRS publication 1099 for 2026, the threshold reverted permanently to more than $20,000 in gross payments and more than 200 transactions. Both, not either. That's the third-party settlement organization rule under Section 60(5) WIE. And unlike the NEC threshold, this $20,000 number is not indexed for inflation. It's frozen, which means in real terms, 10 years from now it's covering a lot fewer people than it does today. That's not an accident. That's Congress choosing to let the reporting net widen slowly without ever taking a vote on it. But here's the trap. That $20,000 threshold only applies to what the IRS calls third-party settlement organizations. If you accept payments through what's called a payment card processor, a merchant acquirer, meaning a straight credit or debit card transaction, there is no de minimis threshold at all. Zero. The IRS Form 1099-K FAQs spell this out in Answer A2 and A5. If you took a single 1-cent payment via a customer's credit card, technically the processor is supposed to send you a 1099-K. In practice, most freelancers who use Square or Stripe as a card processor are going to get a 1099-K for essentially every dollar that moved through it. So if you're a photographer running weddings on Square, or a bookkeeper letting clients pay by card, don't expect the $20,000 shield to apply to you. It won't. Your situation depends on whether the platform is acting as a card processor or as a settlement organization, and honestly, that distinction is buried in the fine print of your merchant agreement, worth 10 minutes to actually look. That brings us to the third form, the 1099 MISC, which is the most misunderstood of the bunch, because people think it's one form with one threshold. It isn't. It's one form with a bunch of box-specific thresholds that all move independently. Per the December 2026 instructions, Box 1 for rents jumped to $2,000. Box 3 for other income also went to $2,000. But, and this is the part that trips landlords and creators up, Box 2 for royalties is still $10. $10. If you got $47 in Kindle royalties or Spotify streaming pass-through, that's a 1099 MISC. Box 10, gross proceeds to attorneys, stays at $600. Box 6, medical and healthcare payments, stays at $600. And Box 7, the direct sales checkbox for consumer products sold on a buy, sell, or deposit commission basis, is a $5,000 trigger, and it's completely separate from everything else. So if a client tells you, "We didn't send a MISC because you were under $2,000, they might be right, or they might be very wrong depending on which box your payment belonged in. Okay, so all three forms exist in your world now. Which one supersedes which? Because the same freelance dollar can theoretically be reported twice, and I've watched people talk themselves into paying tax on the same income twice because they didn't understand the hierarchy. The rule is in the December 2026 instructions for Form 1099-K, and it's actually clean. Section 65C OBBBA supersedes Section 6041 and 6041A. In plain English, if a payment goes through a payment card or a third-party settlement organization, it goes on a 1099-K only. It does not also go on a 1099 NEC or a 1099 MISC. So, say you did $8,000 of consulting for a marketing agency in 2026. If they paid you by AK, you get a 1099 NEC. If they paid you through PayPal goods and services and the total activity on your PayPal account crossed $20,000 across 200 transactions for the year, that $8,000 shows up on a 1099-K instead, not a 1099 NEC. And if the agency's bookkeeper messes up and issues both, which happens all the time, I've seen it 3 times just this year, the correct move on your side is to report the gross once on Schedule C Line 1 and attach a reconciliation statement explaining the overlap. The Schedule C instructions for Line 1 actually anticipate this. If reported 1099 NEC totals exceed what you put on Line 1, the IRS wants a statement explaining why. Give them one preemptively and you'll save yourself a CP 2000 notice. 2 more edge cases before we tie this all together, because these are the ones I get emailed about. First, backup withholding. If you never gave a client a W-9 or the TIN you gave didn't match, the payer is required under IRC Section 3406 to withhold 24% and send it to the IRS on your behalf. And here's the kicker most people don't know. If backup withholding is applied, the payer must issue a 1099 NEC, 1099 MISC, or 1099-K regardless of amount, even below the $2,000 or the $20,000 threshold. So if you got a form for what feels like a tiny payment, check box 4 on the form. If there's a number there, that's tax already sent to the IRS in your name, and you absolutely want to claim it as withholding on your 1040. Leaving that on the table is just handing the Treasury a tip. Second, the tips and overtime boxes. The December 2026 revisions added new boxes on all 3 forms for cash tips and Treasury-tipped occupation codes, and on the NEC and MISC specifically, a new box for overtime compensation tied to OBBBA deductions. If you're a rideshare driver, a stylist, a delivery contractor, anyone whose income includes reportable tips, those boxes matter for the new OBBBA deduction on tips. Your exact tax benefit depends on your bracket, your filing status, and whether your occupation code qualifies, so I'm not going to hand you a one-size answer here. But look at the box. Don't ignore it. All right, so how do you actually put all this on a Schedule C in April without losing your mind? Here's what I do, and this is the approach I use on my own return. Take every 1099 NEC, every 1099K, and every 1099 MISC you receive, and lay them out next to your own bookkeeping, your bank deposits, your Stripe payouts, your PayPal reports. Your gross receipts on Schedule C line 1 should reflect your actual total revenue, not the sum of the forms. If the forms add up to less than your books, that's normal now. A lot of clients paid you under $2,000 and issued nothing. Report the full number anyway. If the forms add up to more than your books, you've got duplication somewhere. Usually a client who issued a NEC for money that already went through a TPSO. Attach a short reconciliation statement. Done. One quick admin note that's going to hit anyone who files their own 1099s for subcontractors. The FIRE system is being retired. Starting with filing season 2027, which is the January you'll be filing your 2026 forms, IRIS is the only IRS intake system for information returns. If you've been using FIRE, you need to migrate. It's not a huge deal, but it's not zero effort either. Set up the IRIS account now, not the night before the deadline. I'm not a licensed CPA or financial advisor. This is general education for freelancers, not personalized advice. If any of this saved you from a double reporting headache, do me a favor and hit subscribe. I put out one of these every week specifically for people who are running a freelance business without a payroll department behind them. And if there's a specific 1099 scenario or freelance tax question you want me to break down next, drop it in the comments. I read them and I pull topics straight from there. Next week, I'm going after the retirement deduction mistake that self-employed owners keep making. Specifically why S-Corp IRA basis and the solo 401k two-bucket structure are not interchangeable, and which one actually saves you more. That one's going to sting for a few people. See you then.